It's Soleil, and this is episode 521 of the Orange Pill Investor. And today we got to talk about Strategy's new release of their, I don't know if it's guidance or whatever, but Saylor hinted at it when he talked about should we add green dots to the orange dot weeklies. And there was a good bit of speculation and a bunch of different good ideas were floated around. And Adrian was compiling a list of suggestions, and Grain suggested in our internal signal chat that maybe this was stockpiling some dollars, and so he added that to the list, and it turns out that that one ended up being correct. And there were other people speculating it as well. Not saying he was the only one, but pretty interesting development. And the way that I'm kind of looking at it is like, and maybe I'm talking to the men here, but if you've ever been arguing with your woman and you're rolling your eyes and you're like, oh my God, what is she complaining about this time? And the first question you kind of have to ask yourself, though, is, does she have a point? And if she does, then get your shit together and fix it. And then if she doesn't, then you can just go about your business. But in this case, there's tons of nagging FUD about Ponzi schemes and the ratings agencies, things of that nature. And I think this disarms a couple of those arguments. The Ponzi argument was a little bit of a stretch, but I think legally they may have had a point if there was a loop that was closed. And I can't remember who described it exactly, but there was some, there's the emotional FUD that just gets vomited out onto X posts, but then there's some actual reasonable, rational FUD that requires a little bit of dissection. And this one said that, okay, so we're selling the common to pay the dividends on the preferreds. And I thought it was a genius move to come out with Stride, because then I thought, oh, well, Stride is the highest risk one. So even in a shitty environment, like let's just say Bitcoin trades down to 50 or whatever, and Strategy is just languishing, collapses down to 2022 levels or something. MNAV is fucked. They could still argue that they could raise money for Bitcoin with the Stride, because it's like, okay, it's bottom of the capital stack. You should be expecting some risk here. But then how do you pay for the dividend on something like Stride? And if the answer is turning around and selling more common at a negative MNAV to pay the preferreds, it kind of like closes the loop on a circle. So that was the Ponzi. That was at least like a rational Ponzi argument. And I'm not necessarily saying it's correct. I'm just saying that somebody would be able to put forth that argument potentially in court if somebody wanted to sue somebody, and it might actually get some traction. And so this, I think, disarms that narrative. So it's probably smart to do this. My initial reaction was like, cash is trash. We know it's a melting ice cube. Anybody who's listened to dozens of frickin' Sailor videos knows that fiat is a melting ice cube. But in a certain sense, like, we already know we've won. We're already kind of like living in the future, and we can't force the rest of the world to keep up. Like, they're going to get it when they get it. So there's going to be this weird straddling the line in situations where we just kind of like have to let the rest of the world catch up at their own pace. So this is probably, optimal would be no cash, period. We just go all in Bitcoin, every square penny, dig through the couch cushions. But in order to tiptoe over some of these legal requirements, this was probably necessary. So it's probably the smart thing to do. And then there's the S&P ratings, where they came out and said, we're not going to give you credit for your Bitcoin. We're actually going to give you more credit for cash than Bitcoin. So maybe this is a virtue signaling to them, hey, we are responding to your criticism or your concerns, and hey, we're gonna set aside a bunch of. It serves two purposes. It lets the ratings agencies know that they're cash positive or whatever. They're generating the ability to accumulate cash, as well as socking away a bunch of the dividends for a rainy day. So kind of two birds with one stone here. I see that we got some other signal chats, and people were saying that the market is panicking over this and saying that this is a signal that the bear market is coming. I don't think that strategy thinks that a bear market is coming in for Bitcoin, but they're just preparing for all bear markets. So now they can just kind of prepare for a rainy day kind of thing. Have enough operational cash to get you through the dividends in a downturn. Now, if we end up in a bear market for the next year or two, then the people will be, retweeting themselves and saying, see, I told you so. Strategy was getting ready for Bitcoin to crash to 50. If they end up being right, I think they'll accidentally be right. Nobody knows what Bitcoin is going to do. Some of the models are useful, but they're all going to be broken. And we know what's going to happen in 20, 30, 40 years, but we don't really know what's going to happen in 3 to 6 months. So would it surprise me if Bitcoin is trading at 50 in the next 12 months? No, not really. I am a little bit concerned that Bitcoin is suffering from the attack that Core has been perpetrating. For sure with V30, like the mask is off and they're not even pretending that it's not an attack anymore. I think whether it was, which one is it? So it's is it Occam's razor that says it's the simplest answer is correct, but then is it Hanlon's razor that says don't attribute it to malice, which you can attribute to stupidity. So if you want to be charitable, you could say that Bitcoin Core has been incompetent since the block size wars. If you want to attribute it to malice, you could say that this was an attack. But it is clear and obvious that one of those two must be true, because Bitcoin has not been protected from spam. So you can say that that was due to stupidity and laziness on Core's part, or you could say that it was intentional and malicious. But regardless of whatever the intentions you want to attribute to the current state that we're in, Bitcoin Core has either encouraged it or failed to prevent it. There's no other way to get us to the state that we're in today. And so I think Bitcoin's price, somebody was asking me yesterday, like, why are people rotating into the preferreds when we're about to have a parabolic move? And I'm thinking to myself, why would we have a parabolic move? I mean, we know parabolic moves are coming, but why would you think that there was one about to happen? just because we've anticipating it to happen and hoping it would happen and feel like it's owed to us, right? Because every 4 years, the halving and the 4-year cycle, this is all supposed to happen, and we're supposed to get 150. We're like, the market owes us 150, right? Well, the market doesn't owe us jack shit. I was just as bullish when we got to 125 as anyone. I thought for sure we're going to 150, 175, 200, blah, blah, blah. Even if we don't get the calls for 444 or a million like we had back here, I still thought, man, this can't be the end of this run. But it absolutely can be. And that's why I try not to have too much hopes over the short term. So if the bears are correct and we go back to 50 before we get to 150, they will have been accidentally right, I think. And strategy doesn't know anything more than anybody else does. Like, Bitcoin does whatever the fuck it wants, regardless of what strategy wants it to do or thinks it will do, at least on the short term. So buckle up and, don't trade so leveraged mark to market that you can get wiped out. I'm trying my best also to manage my margin use as best I can. Like, if strategy trades down to 115 again, I think I'd still be all right. I might have to start like eating Vienna sausages instead of red meat. Maybe I have to tighten my belt up a little bit, but should be fine. Unless the bottom drops out of everything. What's up, Dank? Yeah, I kind of liked it myself. Appreciate it. Peter Pan, bought some strategy cash secured puts too early. Don't make the same mistake. You mean you sold some? Yeah, cash secured puts had to be some ones you sold. Yeah, what's going on, man? What's up, Buffalo? So that was all. Well, so the good news is we've got BIP 444, which is also known as the reduced data temporary soft fork. I'm optimistic that Bitcoin wins, right? In 50 years, we know that Bitcoin will impose the free market on the entire world. Everybody will have a couple of Optimus robots, and everyone will be work optional, and we'll be living in fucking Star Trek and all that good shit. But in the meantime, the fiat system is not going down without a fight. But I'm optimistic that Bitcoin will, in the future, we'll look back at this and it will be a self-healing event, and we will get spam off the blockchain. And I was kind of laughing a little bit, but I was really only half joking. I was thinking about spam on the blockchain as idiocracy. It's basically trying to grow crops by spraying Brondo on it. It's got electrolytes. It's got what plants crave. And apparently spam is what money craves. And according to Bitcoin Core. And it just reminds me too, it's like in Idiocracy, it was all the smartest morons that were putting fucking Gatorade basically on the crops to get them to grow. And it's the same technical devs that are super smart, but at the same in these positions of power, but are actually morons telling you that spam is money. Like, it's clearly, obviously not money. If you listen to Robert Breedlove's channel, What is Money? The characteristics of money are like scalability, immutability, fungibility, all of the abilities. There was like a half dozen of them. I can't remember them all off the top of my head. But one of them is conspicuously absent, and that's called arbitrary data. Arbitrary data is not money. It is not an attribute of money. So I'm not swayed by all of these technical arguments where people want to talk about the code and the protocol and all that bullshit when like first principles clearly shows that it's not money. It's there's no money that depends on arbitrary data. The fact that there's been tiny amounts of it in throughout Bitcoin's history is not an argument. You know, we've contained it under 83 bytes. So just because 83 bytes has not been an existential risk to Bitcoin for as long as it's been around, it doesn't mean that 100,000 bytes isn't. Like just blowing the damn thing open. It doesn't mean that just because a small amount of arbitrary data didn't destroy Bitcoin doesn't mean that like a tsunami of arbitrary data won't be injurious to Bitcoin. So I think Bitcoin is going to be struggling to throw off this virus. And I'm going to go a little further too. So the power law people, they like to talk about, power law applies to all kinds of things, right? So you've got the volume and surface area of an ant or a grape or whatever. And then, once it gets up to an elephant size or a whale, it starts to limit the growth that creatures can take. And you can find power laws all over the damn place, right? And most people just equate that to Bitcoin's price, right? Bitcoin's price is going to follow a power law. But, and that supposedly explains why it has a diminishing CAGR, because as it grows, it just can't grow as fast. That's the, I don't know, the symbolic way of, I guess, kind of explaining that and using a metaphor. But Bitcoin also has a couple of other attributes to it that are related to size, and that is the amount of lines of code. So as the lines of code and as developers, well-meaning developers potentially, start adding more and more and more and more and more code, thinking that they're adding bells and whistles and making Bitcoin better, the code itself is growing, and that is going to cause a drag. You can run a pruned node, but I think that philosophy should also be applied to the code in the protocol itself. When you grow something like, and then you realize that it's producing bad fruit, like in the inscriptions hack, and you start seeing spam on Bitcoin, then it makes sense to prune those things out. You could call that fixing bugs, fixing the glitch, if you want an office space quote. And to go with some Elon Muskisms, little, he likes to say the best part is no part, the best process is no process. So when we have SegWit, we have Taproot, and we have Core V30, and we start adding things that lead to negative unintended consequences, the solution is not to just build on top of that. It's to prune them out. It's to delete those damn things and get them off the blockchain so that Bitcoin can grow in a healthy way instead of trying to like keep these diseased branches alive. So that's one way. And the other way that I was thinking about that Bitcoin can grow is the bloat on the blockchain itself. So we know that actual financial transactions are going to make the blockchain longer and longer forever. And we need, for the storage ability of our nodes to keep up with that, but spam, bloats it. So not only is the code growing because developers are adding shitty code to it, but that is resulting on literally the blockchain itself getting bigger. And, maybe it used to be an ant, and then now it's like an elephant, and eventually it'll be a fucking whale. And so all of those things that are growing beyond a healthy scale could all be drags on Bitcoin's monetary growth and monetary use. Those are all just things to think about. It's not like I'm like, okay, yeah, this is absolutely the case. But it is just making me think that Bitcoin might not be ready for this parabolic move that we think the market owes us until we get this shit fixed. So get out there, run a node, educate yourself on the debate, listen to the NOTS people, listen to the core people, fucking figure it out, decide for yourself. There's plenty of intelligent people that have arguments for the core side. I think they're all wrong. Except in this, they did have one kind of point in that the NOTS filters were probably never going to be enough. And to a certain extent, they may have been right that running NOTS was kind of more like virtue signaling than an actual solution. Because if 80% of the network is running something that is going to validate spam at the consensus level, there's really nothing that the filters can do about it other than making it a little bit riskier to get an orphaned block, which would increase the fees and potentially have some kind of economic benefit. But a determined bad actor that wants to put spam or child porn on the blockchain is going to be able to do that with just 20% of the network running NOTS. Unfortunately, with V30, they can just do it peer-to-peer. Like, they can just sneak that stuff in without, as far as I can tell, they can sneak that stuff in without paying the miners, like, the slipstream fee or whatever. They can just sneak that in and get it through. So I do think it is an increased vulnerability that was not there previously. So my suspicion is that we don't get parabolas until the market is satisfied that Bitcoin is healing itself from this attack. That could happen as early as like February, somewhere between February and no later than September, I believe, is when the soft fork should go through. I got to do some more research on it, but I think there was some that Luke Dasher is also working on an emergency soft fork. If some CSAM does sneak onto the blockchain, I think there's some provisions that we could fork it and build on the chain that doesn't have the the freaking porn on it. I can't believe we actually even have to discuss the possibilities of this shit happening, but I think he is working on something that in an emergency would avert disaster in that case. And then eventually there's a user activated soft fork that would allow us to go ahead and just exclude those at the consensus level instead of the filter level, which would address the core's only valid criticism, I think, of that, that a determined actor can get around the filters. Now, there's other ways to hack it and probably get things on there, but those are obvious bugs that I don't think anyone's arguing aren't hacks. And it's the developer's responsibility to find them and clean them up and play the cat and mouse game. So, I don't know if that makes me a bear or a realist, but, we know numbers going up over 5, 10, 20-year periods. I have no idea what's going to happen with Bitcoin over the next 12 months. When I did an interview on Treasury Orange's channel, I was calling for 150 to 200K Bitcoin end of year and $1,000 strategy price. And we got like 10% of that, maybe 15%. So clearly the market doesn't care what we want. It doesn't care what we think. And so you just have to make sure that you're not leveraged beyond a point where you can get liquidated. And that's as closest to actual financial advice as I can give. So talked about that a lot longer than I meant to. So let's keep it moving. Let's see. I know I got some announcements or some emails that I was forced to sell off some Tesla because my strikes, the market closed on me Friday before I got a chance to roll. So I think I lost my Tesla shares. Where's the... I think the exercises and the assignments are captured somewhere else. I don't think they're captured in this activity. But it's pretty obvious to me that I was maintaining about 50K in margin here. So yeah, I'm thinking 100 shares of Tesla got called away. I was trying to hold them for at least a year. That way I could pay 20% capital gains tax instead of 30, but not the end of the world. So I'm just going to go ahead and buy another 100 shares. Well, let me check the chart. So what am I closed at? Yeah, whatever. It's fine. And so now that I have 100 shares, this gives me the collateral to sell a covered call. And unfortunately, because I've ridden strategy down so far, I have to be pretty aggressive on collecting premium in order to keep the lights on and the bills paid. So if I wanted to collect a bunch of upside, I'd probably go to the expected move, 45 days, whatever. But I'm going to be very aggressive with trying to collect premium. And Tesla, even though the Ivy rank is pretty low, at the money, I can get 2% return on capital for one trading week, which is pretty darn good. And so I think I'm just going to build like maybe 1% call away value in here and collect like 1.5% for the week. That just chips away at my margin use a little bit. All right, so that's Tesla. All of these are stocks just in case. In case CSAM does get on the blockchain, the price drops. I fully intend to hold all of the treasury companies responsible if they have not directed their custodians to run a competitor to V30, at least like refuse to upgrade to V30, or run knots and support the resolving this problem with the soft fork. Okay, so all of my covered calls expired. This one hurts my feelings a little bit because if I had rolled on Friday, I would have been able to sell, sell at Friday's prices, and I'd probably be able to roll them down for a credit. unfortunately, I don't get to do that. So I'm going to go ahead and just sell pretty aggressively here as well. So 2% of the premium, 2% of the current price would be at like the 3 something, which is pretty close to the expected move. So I'm actually going to I'm actually going to go pretty heavy on this. This is a pretty bearish position to take. I hope the market reverses, but in the meantime, if it doesn't, collecting what, $4 grand a week is a nice consolation prize. It's so crazy too, because I think after option sellers get comfortable selling covered calls, running the wheel, they just eventually every option seller discovers the poor man's covered call, becomes enamored with it, and is like, holy shit, for $7,800 instead of, I think strategy was like $300 a share back then. So for $8 grand, I can sell a poor man's covered call, or I can sell like 4 of them for the price of 100 shares. I can make 4 times the premium. And then that works great until it doesn't. And instead of the price of your underlying going up or staying horizontal, it collapses by 50% or more. And your deep in the money calls are now deep out of the money calls. And there's no amount of covered call selling that you can do to keep up with that. So it is a useful tool, but it is not a guarantee. And if you guess the direction wrong, there's no saving that position, really. It's basically just a fucking dumpster fire. This one's only been on for 6 days. It's not really ready to roll. So I'll just hang on to that one. Same here. Got to wait at least another week. And this one, hopefully this one survives. You can see as I think I already consolidated a bunch of the other ones, but I was selling like the 300 strike. Let me just, yeah, I think I saw some of the 300s. So when the price of strategy was 400, I thought that the 300 strikes were safe. And when the price was 300, I thought that the 250s were safe. And then I thought that the 200s were safe. And now I'm actually opening the 100 strikes. And hopefully these are safe and we don't see 75 a share. But hell, anything is possible. If we see 75, then I might not be able to afford the electricity to film these podcasts anymore. So hopefully that doesn't happen. However, this one is ready to roll. It's been on for 11 days. I sold it for 15. It's worth less than half of that. Its current value is 84 and the strike is 100. So if I add those two together, I have to sell at least the 185. Probably could go down to the 180 because I'm going to be collecting some premium on this. So let's roll. Expiration dates. I'm going to get 2 extra weeks on this. And man, the expected move is 198. So I think I'll just keep this. I'm going to roll up to the 185. That gives me another grand, chipping away at my margin use. All right, so these are fully covered. All of my poor man's covered calls are covered, but they are still providing some leverage. And then the only leverage I have left, and I've only got another 19 days left on these before I'll be closing them. And so I am going to have to figure out how much leverage I want to keep, because there always is the danger of the upside. There's a ton of positive theta in here. Hopefully I've jinxed the market enough to get a pump, but who knows? The market gods might not like my sacrifice. All right, Dank says, explore this idea. At some point, Strategy's MNAV will be at a premium, and Chanos and the gang will open their long Bitcoin short strategy position. My question is, could Strategy essentially hedge out those deltas via options or futures in order to negate the impact of the Chanos trade impact? Possibly, but I don't think they're in the business of doing that. They might be. They did consider. They said that they might actually, sell some calls against their Bitcoin holdings or open up some kind of futures position in order to fund the dividend payments. But I don't know if they're if they have a battle plan for wrecking the short positions. Let's see, some form of Chanos is long, an amount of Bitcoin in short, an amount of strategy. Strategy opens a trading desk to essentially hedge out that market impact. So they would have to go long Strategy and short Bitcoin. I mean, I kind of made that bet in the middle of last year, which worked out. But I don't know. I don't know that they're interested in being traders in that way. They seem to be willing to just let the traders trade. And even with them capitulating and stacking what, $1.5 billion in cash, it kind of reminded me of what Jeff Booth talked about when he said he talked to Bukele for a couple of hours, and Bukele actually said that he knew that if he accepted the IMF money, they were trying to trap him, right? They were offering them cheese, and then they want him to get stuck in the trap. And the way that he explained it was he needed the cheese and Bitcoin had not grown to a point yet where it was going to provide enough cheese for them to fund the entire country. And so he had to take the cheese, but he said as long as his citizens run nodes and self-custody their Bitcoin, he knows that they're safe, so he could actually take the cheese and avoid the trap. So that's kind of the bet that he's making. And I see somewhat of I see that philosophy here with Strategy saying, you know what? I need the cheese, right? I need the cash and I need the ratings and I need all of these things in order to get the cheese. So fine, I will, pay my little pound of flesh for now and just sit back and bide my time and wait for Bitcoin to cause you to capitulate. But for now, they're kind of having to tread lightly and basically play the game, a little bit of an appeasement game. So whether or not that's how they're thinking, it's just stuff that I'm thinking about when I'm walking the dog and listening to podcasts. So, all right, I got this rolled out. And just getting wrecked on all of these positions. I did Tesla. All right. So this is the IRA. I guess I didn't get any shares called away here because I don't really have any buying power to speak of. Oh, no, I do. I have 11 grand in buying power. Okay, so I must have had, you know what? I had a bunch of mining stocks here. And I've got 11 grand to play with. Let me just make sure I've got 2 covered calls against shares. I've got 10 poor man's covered calls that are really only good for another 19 days. So by the time it's time to roll these, I'll probably just close all of these down and reboot the situation. But this one's definitely ready to roll because it's not worth much. And in the IRA, I'm being a little bit less aggressive, I guess, here. So I'll roll to the expected move, collect a decent credit. And then once I'm done collecting all the credits that I'm going to collect, actually this is going in the other direction, so I will hold off here. And let's spend 12 grand. I could get a poor man's covered call at like the 100 strike, like I was doing. Let's just see what that would look like. So if I go out 382 days, oops, wrong direction. Not Tesla. Well, I guess I could do a Tesla. Matter of fact, but let's do. So that would actually cost me 8 grand. And then if I sell the 185, well, the 195 would be closer to the expected move. That would be about 10% return on capital over 45 days. Best case scenario in 2 weeks if I roll half of that and collect 400. That would be 5% over 2 weeks, so about 2.5% returns per week, assuming that the price of strategy doesn't go down. I can get $1,000 at the 185. Let's not get too crazy until I reset what's going on here. So for now, I could probably do something in the mining space. Iron is fairly expensive, so I could do can't quite get 300 shares. Let's buy 200. Sell 2 covered calls, and I'm going to be extremely aggressive, just literally at the money. No call away value. Don't care. This is just premium generation. That's, let's see, 1% of 48 would be basically, let's say 50 cents. So this is collecting like 4% weekly returns. Leaves me with 3,500. Cypher was the other AI play / mining stock play. Where'd it go? I can get not quite. Gonna make me pay more. All right, same deal. For me, this is not about upside. This is just pure premium. So I spent 2 grand, and I'm not gonna collect $100. It's like almost 5%. Actually, I think it is over 5% for the week. That damn thing's already in the money. That's hilarious. All right. What's that leave me with? $1,600. What else is there? CLSK. There we go. Buy 100 shares. Sell a covered call. Shouldn't leave me with much. There we go. Like if I wanted to be super duper efficient with it, I guess I could buy 2 shares of stretch and earn like 1% on that. So this is just me trying to Tetris this shit and use all of my buying power. So now I've got shares of 3 different miners, and running the wheel. If these get called away, makes no difference whatsoever. It's just about collecting premium, using that premium to collect more premium, and trying to get like a compound interest / like log normal type of return. Absolutely. You're welcome. All right, this is my spending account. Did I deposit anything? Nope. So these are doomed. My poor man's covered call is an absolute dumpster fire. It's only been on for 5 days, so nothing to see here. Have to go ahead and place a covered call against shares. Again, I'm just going to be very aggressive with this. Wait, why? Let's see here. Oh. Yeah, there we go. Okay, this one, yeah, 100 shares of Tesla for sure got called away here. So let's just add that back in before I do anything. And again, I'm going to be just going to do the weeklies. I want to collect at least 1%, so I'm going to go here. Okay, cool. Forget what else I had in here. Probably some mining stocks, just to fill in the blanks. All right, Tesla's done. Sell, covered call. Let's go 70. Right, covered, dumpster fire. Again, I thought 250 was safe, thought 200 was safe. Nothing is safe in this world. And again, I've got 19 days left on the lifespan of these. So I'll just wait for that 2-3 weeks. It'll be time to roll these, and I'll just close all of these positions and then figure out what I want to do from there. So with the last 9 grand, I can do the same thing with iron that I did in the other account. Let's buy 200 shares. Oh, that was a little bit more expensive than I thought. So once I sell these, I should be good. That should take me out of margin use. I got a little over anxious there. All right, cool. I think that does it. I went with iron because it's the most expensive of the 2 AI mining plays between iron and Cypher. And with Tasty Trade, since I actually pay like $1 per contract, I'd rather not do 20 bit farms and pay $20. Not bit farms. Yeah, it's $3 a share. All right, I could do 20 of these for the same price as what, like 15 of the irons, but I would end up paying more in fees. I think they do, if you do a lot of 20, I think they'll actually only charge you 50 cents per, but regardless, if you have a small account, you probably want to trade on Robinhood for free trades. And you can still open an account with Tasty Trade and put no money in it and still get access to the tools and whatnot. But it's not that I think, oh, iron is better than Cypher or anything else, really. It's I can just use the most capital with the smallest number of contracts. Less work for me, less fees. All right, let's check the 5K account, which is struggling to hold on to 5K. Think so. I did add one position. I copy traded this with my son, and with strategies IV rank up over 40. As far as Tasty Trade is concerned, anything over 25 you can kind of sell options for the most part, but below 25 they're just not too excited. But you know, 40, 50 is at least 50 is kind of the sweet spot. So 40 something is getting a lot closer at least. Market chameleon, doesn't matter. So basically the point is this is a good option selling environment. So we went ahead and did a put credit spread, the 125, 120. We basically have to put up $500 in collateral. We get paid $1.10, and then it's, you know, the whole point is similar. Is every 2 to 3 weeks you're hoping to roll this for half the credit. So 50, 55 in 2 to 3 weeks. I would want to roll this out to end of January, beginning of February, and collect another $100 and continue to do this for as long as I can. Now, if strategy crashes to 110, 115, like I was talking about earlier, then yeah, we lose the whole $500 minus the 110 we got paid. So technically the max loss is 390, which should be listed here somewhere. I thought they usually list the max loss. Okay. There's a little graph that comes up when you're selling this. It shows you what your max loss is. I thought it would be here somewhere, but yeah, the break even, it can go as low as 123.90 and still break even on this position. I had done the same thing on my own a week or two ago on the 18th when the price was around, I don't know, like 200 or something. And I thought, oh yeah, 175, that'll be good. So this one is already going against me. I'll be, over the next couple of weeks, probably trying to roll this and avoid losing my monies here on this position. So we'll see. That leaves me with $800 of buying power. Plus I have 4 shares of stretch, which would bring me closer to about 1,200. I could probably find something trading around that price. CLSK is at 14. Riot. I haven't traded Riot for quite some time. 15. Wolf is probably affordable at that price. Oh, 15 bucks on Wolf as well. Maybe they're all trending to 15. All right, so maybe I take that 800 bucks and I just buy another 8 shares of stretch and wait for the premiums to add up to enough to do something with it. All right, the $61 call. Yeah, that's not ready to roll yet. Peter Brand says strategy at 1 MNAV would be 140 at the moment. That's fun times. Travel with camera. Oh, the irony in Sailor stockpiling a US dollar reserve. Yeah, it really is. Let's see, if Bitcoin crashes to 55, strategy at 1 MNAV would be 90. Fuck me. That would be brutal. What's up, Tyler? Strategy ATM'd us to buy Bitcoin. Now they ATM'd us to hold dollars. Yeah, looking at it in that terms, that is a little bit of a shocking development. You could even say a slap in the face. Why am I still stacking so hard? I know. Yeah. I mean, I think worst case scenario is the gains that we thought we were getting in 3 months, it might take 24. So that's unfortunate, but sometimes it bees like that. Okay, so yeah, I don't think there's any moves I need to really make here. But yeah, let's just go ahead and buy another 8 shares of stretch until I've got enough dry powder to do something with. If any of those mining stocks I mentioned drop below, what, $12 a share, then I can just dump the 12 shares of stretch, buy 100 shares, sell another covered call, and repeat. Rinse and repeat. Yep, $73 worth of buying power. I think we're good. So Skunk's Misery says it's like supply chain resilience. Is that discussing the cash reserves? Buffalo says not happy about the dollar reserve, but I can see how that is going to P Strat 5. Yeah, that was my first reaction as well. I was like, what the fuck is this? Like, if you have money, that's just Bitcoin that you didn't buy. So as a purist, I would love for strategy to just thumb their nose at the whole fucking market and tell them to get fucked. But you know, maybe it was necessary, and maybe it'll work out in the end. Let's see, yeah, like in COVID, supply chains were over optimized and couldn't handle the stress. Yeah, that might make sense. All right, that is all of the trades for today. Me screwing up the timing on Friday probably because I would have been able to roll today for at least 50% credits with the way that strategy is crashing. So what? Mistiming the market close probably cost me $5,000 on Friday. That's annoying. All right. Appreciate everybody for tuning in. Be good, y'all.